So welcome back. We are now for an exciting presentation. It's from Bakhtiar Wain, who's the CEO of Avanceon. Avanceon is, again, another company which is doing extremely well. They have won a lot of contracts in the last few months, especially. And I wrote a blog early on. Avanceon is the best IPO in Pakistan over the last since the time they listed. So that also goes to their credit that they have generated the highest amount of shareholder return for any company which went public in the last, I think I did that analysis on the last 10 years. Bakhtiar Wain Sahab, thank you for taking your time for this conference. You're the third speaker. You are the host now, and so we'd love to hear more about it.
Thank you, Ali, for inviting me. Let me share my screen. Yeah, I think now it's on presentation mode.
It is, yes.
Okay, so Ali, thank you so much for giving me the opportunity. And your introduction was very nice. We take pride in the fact that we've given very good shareholder return. Although, in our organization, we hardly talk about that. And when people tell me about all these things, I say, our focus is purely on technology and actually delivery and developing the business. These are all the offshoots of the work that our team does, and which a lot of people don't identify and appreciate. So thank you so much for identifying it. So I will move along, and I have some exciting things to share. One is about our whatever we are right now, and a lot of you also know that we are embarking on a journey of digital, and we've already invested very heavily for the last 2-3 years in developing some applications and moving our whole thing on the cloud, which is very unique. And we believe that we are kind of in our space of system integration in the manufacturing space. We probably, and we have done enough research to ascertain that we would be the initial ones who have invested in this, and we are very bullish and very excited about what we are going to achieve in the next 5 years. So I'll give you a rundown on that also. But before I go, again, I have no link to finance, but after running my business, I have become, people make fun of me that I am more of a finance guy, but that I only touch these things and discuss this when I am in the company of financial people. So I will first go through a bit of finance, and then I'll walk you through the business plan and everything. The agenda I have outlined, and here you go. So I think our business model is very clear. People talk about offshoring, outsourcing. We've done that over the years, but we believe any outsourcing, offshoring should not be part of your financial model. That is what brings efficiencies, and that should drop right to the bottom line. So if we work in Dubai, or we work in Qatar, or we work in all over the Middle East, our work is to compete with the best of the best in the world. Once we do that, getting business on price point is not what we talk about. And we will never talk about that, we want to win our business purely on a professional basis at the same price point that people who don't have the advantage of doing outsourcing, but then we have the advantage of using Pakistan, which more so improves the quality because our teams are not fragmented and the same kind of work is done again and again. So our quality improves, our variability reduces, our ability to deliver in time improves. So that also brings cash to the bottom line, and that is just incidental that the price point while we're doing in Lahore is less than in other geography. So we take, and that's why you would see that whenever we get business and we have a threshold that we get to that threshold, real money starts falling on the bottom line. And this is something I presented in detail to analysts 5 years back, and that has been proven based on our revenue. So we set up a mission 2022 that we will double our order generation, a little bit of dent in 2020. But I think we are on track that we'll double our order generation by 2022. On the other side, our investment in Octopus Digital, I genuinely believe that it will be bigger than what we are right now. Standalone basis, in the present frame of mind, I've done enough analysis, but the fact is, I think I'm handicapped in even visualizing what it can bring. So I will walk you through that also. So some of the things I have just identified from my previous presentations what I've been talking about. I've been talking about business model, business model, business model. And you know what? I've always said that if you have to judge us from a business model, it is only order generation. Because whatever I commit of revenue, if I don't have enough backlog, and I'll again recycle back to Ali, because Ali in his emails have always asked for backlog. And since I've been in touch with him, so I felt that he knows our cycle of business, that people can come and talk whatever, but because the cycle of business is that it takes you 6 to 7 months to mature a business. So then you deliver. So unless starting in January, you are clear about your next year's targets, it's very difficult to meet any revenue targets that I talk about. And we worked very hard over the last 5 years in doing that. If you look at our old financials, first quarter would be loss, second quarter would be less loss, third quarter would be profit, and fourth quarter would wipe out all the losses and will show great. So that's a nightmare for an analyst. So we started working on how we should continuously monitor our sales efforts. So our order generation, if you look at it, 2018 was double. Then we went into 2019, 56. 2020, we were expecting an order generation of about 65, 70. We are at 59. And mostly not because we've lost any business. It is mainly because of the last 9 months that business decisions have been deferred and delayed. So we are still extremely gung-ho about 2021 and are moving in the same direction. So Avanceon engine, we totally revamped the way we used to look at sales, the way we used to look at our finances. We did a complete revamp of our ERP. So in our ERP, we can go down to each engineer's profitability to a level that what percentage of his work was billable. And since we've been doing it, it's a joke in our company. I say that we were working 4 years back when we thought we were a great company, and we still were. We were working at about 20% billability. And if you're working at 20% billability anywhere in the West, you would close down in a year. So our revenue increased. We implemented that. We are further doing it, a cloud-based solution to further monitor. So we are now at 63% billability, which I believe is tremendous, but we have to go to 90 to 95. Testament, very easy KPI for that is that we were a 250 engineer company 4 years back. We are only 325, and our sales have gone 3 times. So it's a good. So now we can monitor that, and our whole CRM, ERP, totally cloud-based. We developed internally in partnership with. So so that is our behavior. We put up a whole HR plan. We exactly know which engineer has to be trained what for the next 3 to 5 years. It's a cloud-based solution. We are, so we move with the engineers based on our business plan. Our HR makes an HR development plan, and that's not a 2-3 months speculative plan. That's a plan based on our business plan for 3 to 5 years. We already have it in place. And because of that, our deliveries have improved. We've started recognizing revenue. Our revenue recognizing policy is extremely conservative. So that used to affect us a lot. So unless we deliver totally, we couldn't. So now, we had to, that actually worked for us, because then we had to tighten our belt. We had to work really hard. That backlog has to be delivered. We need to get customer acceptance. So that way, our financial commitment to projects has improved, everything during. And even in COVID-19, not a single project faced late delivery charges and anything. And this is what our commitment was with you. Some of the financial things. So I instead of going into, so I've just picked up our third quarter results. So if you look at that, so two basic numbers, our profit after tax compared to last is 57% up. Profit before tax is 43%. And then when I looked at these numbers, trust me, I had not seen these numbers before the quarter end audited report. And it was the first response was that it's fantastic that we've done it in COVID times. So that means, so somehow it's been an injection to our business, and I'll talk about it why later. But these are all good numbers, and we expect it to do the same by the end of the year. So these are comparable. They are included in our and I've just picked up this right from what was reported to the stock exchange. This is our third quarter 2020 result. So profit after tax, before tax up 43%, profit after tax up 50%. And now the reason for that is we once even presented our tax model, because it's outsourcing all the work that we do out of Pakistan and sell to our foreign companies is tax-free. So as our work increases out of Lahore, we make more money. And the other thing, because there was some structured things going on, we take pride in at arm's length basis. So any work that we do internationally, no shareholder has any direct shareholding in that company. So that means anything that we do, if I, as the largest shareholder, has to take dividends, I have to bring back the money to Pakistan, which every other shareholder would also enjoy, and then I take my dividend. So as a policy, we did it, and there is no subsidiary, because we operate in different countries, which is not a fully owned subsidiary by the company in Pakistan. That's why everything that we do in any upside that we get anywhere in the world is reflected in our accounts. So I think I can quickly go through that. There is nothing. So we've been on if you look at it, in 2 years, we've almost doubled our sale. Profit lags behind, because when you are trying to increase on the sale, you invest a lot. So those profits are falling now. They started falling in the third quarter last year when all the benefits, and now you're seeing a ramp up in the percentage of our profit after tax. Another interesting thing. So for this meeting, I thought I would just evaluate what our stock performance was. So what I did was I asked them to put in all the bonuses, all the dividends, everything over the last over the 5 or 4.5 years. So if you look at it, at a 14 rupee, it went to 17. So if you factor in all that, in 4.5 years, 217 it becomes. So a cumulative return of about 1100% or whatever. And then I wanted also, because you told me there would be some fun. So there have been massive devaluation. So I wanted to put the dollar sign also on it. So whatever, if somebody would have invested in dollar terms in 2013, 0.17 of dollar would get him 1.36, which I think is a very reasonable return for any stock investor in the company. So what is, again, so having said that, really important thing, but every analyst wants, what's the current business in hand? So even if we do all the deliveries, if we meet, because it's a double-edged sword. You deliver everything, your backlog reduces. But if we do everything what our plan is, and we do a fantastic 40% net sale increase, which is the highest in our history since we have come to a level which is reasonable. We used to do 100%, and I would always think that nothing less than 100% makes sense in growth. So with 40% net sales growth, at the end of the year, the net backlog as of September 30 is $56 million. So that would, I would say, grow to around $60 to $62 million by the end of the year. So we are, even after post-COVID, we are in a purple patch. We are in a very good condition. So another way to look at it is that if our revenue is $40 million, we have 18 months of run rate already. which is not very common in businesses like us. I talk to so many businesses around the world who are like our size and all that, and nobody can talk like that. So in certain ways, going through COVID and being in this position, our team has done a stellar job. And I think the way they handled COVID, and then when I talk about team, I'm very emotional about it, very excited about it. You know, when we, and a small story is that when we gave stock options, and I went personally to get it approved from SECP, it was rejected because we were the first small cap company who, before going public, had taken a 50 million rupee expense that 5% of the shares would be given, and we were giving those stock options at zero value to all employees who had been with us for 10 years who had built this company. And the response for SCCP was, which is very funny, that nobody does it. I mean, we smell a rat in that. And I remember I was talking, I said, you know, let's call a spade. So you essentially are saying that it is a scheme that I will claw back these shares personally from them. And under the cover, I am getting the shares. He said, yeah, it looks like that. I said, you do all your audit. And then after a lot of to and fro, they said, look, we can't allow you to give at zero, give at 1 rupee. So those shares were given at 1 rupee. So it's been continuous. Our HR plan is fantastic. Those people, we have some great success stories. Our head of Qatar joined as a trainee engineer. Our head of our Octopus Digital joined as a trainee. And all of these guys did their MBAs while they were in the organization. Our head of business in Pakistan joined as a trainee engineer. You talk to them, you put them in front of any professional in the world who are doing that business, and you feel proud that they're Pakistanis. And so we have built a team, homegrown team, who have learned, who have invested in their performance, in their own portfolio, gone way beyond their engineering education, and they run the company beautifully. So this is another thing. So we take sales as a science. And we have developed a whole sales cycle, which I volunteer for every technology company that I can give that lecture and train them free of cost. This is a whole funnel approach where how much every sales engineer has to put every inquiry and follow a sales process, what he's done. So if there are 10 steps, 20 steps, the software automatically calculates whether we have achieved those steps and what are the probabilities. So I can say I have a probability of winning probability of 90%, but that would be conjecture, and that's what I would be thinking based on my maverick attitude. So our software no longer allows you to do that. So if you look at it, they're all opportunities that goes in the funnel. So the blue ones are prospects. We don't consider them. We don't consider them that these are the ones which will come. Even a sales engineer would say that, oh, I'll get the purchase order tomorrow. No way. If you've not gone through that, do you have a coach? Do you know what your competition is? So these are all the questions which he has to put in the software, that I know all the stuff. So then you come down to the funnel and say, oh, these are the business which we expect to have in the next quarter. This is totally online. We do not conduct any sales meeting. If a sales manager even talks to our CEO and says, oh, I have this, he says, do you have the report from that? Can you open that? If you don't have updated inquiries, I'm not going to talk to you. And took us 2 years to come to this point. And we are very proud of this automated sales management because it's B2B business. If you do a misstep in B2C, you'll find out and your sale would reduce by 5%. B2B, your whole quarter sale can be wiped out. There is no prize for second place. The first place guy gets the whole business when you're competing in an opportunity. And this is something that people don't realize, that being second is zero in our business. In B2C, you could have, oh, I have 50% of the market of anything, a shampoo. Oh, I also sold 40%. No, in a large business, if you're doing Aramco, if they have come out with an inquiry, you better be on your toes for 9 months and do all the process, because no matter how hard you work, if you're Number two, you'll get zero revenue from that opportunity. So this is something that we do, which we are very proud of, and I always show it to people. The other thing that we did in COVID, we had an outstanding, and because we had moved all our business, our whole processes, our whole business, even travel authorization was already on the cloud. We had decided that we would move our whole processes on the cloud. We were in the process of now doing our development on the cloud, which is very difficult in our case because we use very proprietary software industry. So you have to build machines on the cloud and all that. But we were in the process of that. When this happened, it's interesting that our business continuity didn't hurt at all. The only thing was, what do you do about the engineers? So we had 5 days. We moved all our development, and 350 plus workforce was billing remotely. And we have a lot of field jobs also. So it was interesting that only one person, sometimes we use our client engineers for field jobs and using videos, augmented reality, virtual reality, commissioning. We did a job of Aramco in which there was a factory acceptance test. There was usually we need 6 to 8 people to carry out that test, which takes about 7 days. There were 8 engineers in their homes in Pakistan conducting the test, only one at site with the Aramco people. And Aramco said, this is the best test that you've done with us ever. So we responded very quickly, and that is how we did it. So I will quickly go forward because, I can keep talking about these things about my company because I don't have too much time left. So now, what are the future goals? Very clear. Invest in latest technology. We've already been doing it. We are working on AI and VI. We are doing very customer-centric priority. We're moving towards that. And we plan to build a customer experience center, which would also be mostly on the cloud. So we would be able to razzle and dazzle the customer based on our AI, VI, what the new things that we're doing. And that's a sizable investment that we'll be making in the next year. So now, what are we going to do? So we talk about, this is what we are. We talk about digital transformation a lot. And that's why we wanted to keep it separately. We have made a different company called Octopus Digital. And whatever intellectual property that we have been developing over the last 2 years, we moved in there. And everybody knows about Industry 4.0, but we believe in the nuts and bolts of it, and we found a niche. And I'll talk about it, that what's our niche all over the world, that we would be able to babysit small and medium enterprise manufacturing space over to Industry 4.0, which they cannot do on their own. So another way how digital, but I will skip that because I just looked at time. And so what is Octopus doing? So Octopus is developing a few things. One is TopFit. So what we're doing is we have a whole suite of things in which is a subscription model, and we'll give performance of plant. We'll give performance of production. We'll give them efficiencies on a real-time basis. And then there's another intellectual property that we've developed, which is OmniConnect, so which also sits on the cloud and can go onto production side and gather all the data. And all this is on open architecture and totally open databases. And we've eliminated any large proprietary software which is used, and the name of these softwares are Schneider, Rockwell, and all the companies that we work with. So we've eliminated all that, based it on purely open data structures. And these are the two things. And this will all be subscription based, and the customer would not invest any money upfront. So they will just see the results. And we have linked it with our service business, because we believe where we have service contract, this is the thing which goes. So we have carved out our service business, put it into Octopus, because services goes hand in hand with digital, and there is a great mix that we've developed. And then our team, brilliant team, has done so much work on it. One day, we will be doing a a roadshow soon into, so we will show actual how it is working in different industries. So what's software? Our software, it does digital dashboarding. It would give you a real, so our digital dashboard can predict that your energy cost is going up. This is the cost compared, this is one example. This is the cost, this was your best cost energy KPI 6 months back. And the way you are running right now, you're losing this much money per minute, per hour, and you lose this much money in the next month. So these are the prescriptions that you have to do, what you are doing. So this is our digital dashboarding. We do prediction and prescription. And then the dream is that somebody who has different asset bases would have an autonomous command and control center where he's looking at all the options and comparing one performance against the other. And this is real time. So where we differentiate with any other IT company is we are doing real time stuff. It is not something, so a machine is running, we are picking up data on a real time basis and calculating it on a real time basis. So if there is one parameter which is coming, it is coming every 2 seconds. So the data is humongous. There is no, I mean, the amount of data that we are gathering per minute, per hour from a production floor is way beyond any other data that anybody else captures. And to do it without any proprietary software, this was the challenge. And this is what we set for 2 years back. And that is why I say not many people are doing that in the world. I do. So we are very excited about the fact what we're going to do in future. So the objective of OmniConnect is that interface at an entry level, give data seamlessly to the customer and time frame and cost. So we say that the first dashboard or first visualization of your factory we'll be able to do in 2 weeks. And it's totally hosted, you don't do anything. And every month you give us changes, do whatever you want, whatever new information you want, we'll keep doing it. And there's a whole financial model and business model that we've developed on that. So again, what it does, our software, what it will do, it will sit on the cloud, it will ingest and push to any cloud, collects data from the data source, pushes it onto the cloud. Just a sec, because the other part is over me, sorry. And then it goes, performs, computes, operations, and then publishes data on any visualization tool. Now that's also very important. All the people who are doing it, in our case, are the ones who use their own, like Schneider's and Rockwell and all that. So we say any business intelligence tool. You could use Oracle tool, you could use, we use a lot of Microsoft tools. So you can just use a tool, which is of no cost. We will just configure it and you'll get all the data. So we did a lot of, this is the ecosystem. So there is no system integrator like us working in this ecosystem. These are all over $1 billion companies. These are all, I mean, not just, they're like $50 billion. So what we wanted to do was that we want to identify the platform. So we signed up with Azure 2 years back, and we started developing our expertise and moving our expertise from conventional systems to cloud systems. So, and the good thing for the investor is that most of that R&D has already been expensed out and has already been expensed out in the Avanceon accounts. So we're now at the cusp of taking it further and expanding our business with that. So Industry 4.0, what is our go-to-market? So this is all the good things, but we've developed a very extensive go-to-market philosophy for that. So data is an industry on its own, and you would have, everybody on this platform would have heard credit card data, this data. Nobody talks about industry data. Nobody talks about. Do you? So if and I've done this analysis, I've done this this questionnaire personally. You go to a textile mill owner also and you say, what was your gas cost? What was your energy cost? He can't give you. And that cost is more than any other cost. He can't tell you that is this cost optimized on this day or not. So this is our business, giving them data, and without any inertia, we'll connect and start giving them that. Cloud computing, this is a mystery theater. People don't know about it in our space. So we have kind of moved a little bit of, some stones to bring it to a level where companies like us can also do that. So one go-to market is companies like us. Every company like us in the world wants to go onto the cloud, but they don't have the ability to invest that much to do that. What we've done, my analysis was that if anybody wants to do what we have done in the last 2 years without revenue, they would need 10 to 15 million dollars just to think about it in UK or US. So we were deploying it on our businesses. We were testing it out. We already have customers in Pakistan, which we can influence. Customers like Shell, all that, they allow us because we have long-term contracts with them, and we've developed all these expertise. So we've developed a whole channel development toolkit. We have, in fact, we are using our existing business channels as partners, and we are testing this model. So we don't go, Octopus doesn't go out and sell. And they decided that in Pakistan, their existing sales channel of Avanceon would use this as a product, and they would deliver. So we have developed a whole channel business within Pakistan, within our own organization at an arm's length basis, so that we develop that expertise that when we, after the IPO, when we scale up, when we go internationally, we would have the concept, and because we've not done channel management yet. So we're already, so our US company would be our channel. So they've looked at our software, they have evaluated it for the last 2 months, and they would be a channel there. So what happens later, but this whole channel development, and also please consider it still as a proof of concept. What the whole market opens up, we don't even know. So this is what is included in the digital. You sell that, so you get everything like that. So if somebody is paying $2,000 a month, he gets all of it. Perpetual engineering. So we deliver the first cut in 2 weeks, and every month, if the data is coming, any visualization they want, we'll do it in the next month's delivery. So we would have, we have process engineers, we have system, so it is like a whole 360 degrees solution that we would be offering to the industry. So we've also developed a pricing model. I can't divulge it right now. So it is based on purely tags. So which we say tags is the number of data points that we are taking from the industry. So we take it, we multiply, we divide, whatever we do. But these are the number. So it is based on the fact that perpetual engineering is based. So it is. So when we go there, we don't go into a long sales cycle. We say, how many tags do you have? Oh, this much data, this is the cost per month that you. So, and I'll show you. The first thing what we did was we implemented it on our own service company. So this is, I can't take the name of the company where it is installed. So all our tech support and all the support is run through our cloud software. So if they want what was done, and then if you look at it, so you see Topware digitalization already there. So they say, what is that? We say, you've not subscribed for that. So if they want some information about their plant, we say, okay, we can give it to you, but you'll have to subscribe. So we have modified our whole aftermarket support onto Octopus and develop a whole digitalized concept of selling services. So they would keep upgrading their offering to the customers. This is another one. So this is how our customer looks at our services. So what is the future roadmap? This is what we've done in 2019 and 20. We've already, so I would say we've already achieved the proof of success, and now we have to scale it. We have installed it in different industries, and it's running for the last 1 year. We've improved the platform quite a bit, and now is the time to scale it. So this is the whole internationalization timeline that we've set. What are the milestones? And this would be included in our investor pack that we send out in the next 1.5 months. So what do? We do industry agnostic software, no need of hefty proprietary licenses, and we start the tap the moment they say in 2 weeks. And let me show, if I can show you something live. I don't promise I'm connected, but let me show you a small dashboard of a customer of ours that we own that site. I mean, we've had a deal with them and we keep on putting technology there. And then let's see if I can connect. So
it's starting. Yes, we see the screen.
So this is live. This is live from, just a sec, I'll go back. So this is the screen that one of our customer, Diwan Distillery, looks at from anywhere in the world. So look at the level. I will go on to one. So their plant manager can go onto the screen, a tile, see, and say he wants to look at the production profile. And this data would be 10 years old also. So he can look. So this is what he needs to look at. And he would be on the cloud. He can put his targets and it would be calculating each year-to-date rupees. What has he done? So this is on real-time basis. As the plant is running, it is being populated. Look at the context that what I'm talking about. And this is, I mean, the data we've changed because we can't show you their data. And I took personal permission from them to show this. But plant load, whatever, target daily production, so they're all databases here. Everything is saving, loss, percentage. He looks at it, and this is the plant manager. And individuals, and now we are working on it, that if their quality goes down, we have developed a model on the cloud which will predict that this is happening, and this is whenever this happens, because they move in their case, if the alcohol production goes from 99.4 to 19.3, that's a huge dent in profit. So they would be looking at it, and this would be our new business, not just doing control system, giving a holistic thing and doing that. And we are very excited about it. So I thought I'll just show you one screen, but people would have multiple screens. And this is our Octopus, what it would be doing. So I will sign off from my presentation now. I took too much, it's very difficult to stop me when I am talking about my company. So I'm sorry, I went beyond the allocated time that Ali told me, but over to you now for questions.
Well, thank you so much. This was certainly fascinating, and I loved seeing the screen because it certainly put everything in perspective. And I think what you're doing is amazing. As you showed, the 11-time gain return which you have generated to your shareholders since IPO is the best in Pakistan, and I'm sure your shareholders are very proud and happy of that. But secondly, what you're making is also transformative for Pakistan. You're helping industries digitalize and use big data for their better analysis. So it's a very, very useful tool to have. And I as a business owner, I can certainly see the applications in my business, and I can certainly see why you are so passionate about the product you have built. So there are a lot of questions which have come, but I'll kick off with the first question. You described your project, you gave your backlog profile. So my question is that, how much visibility do you have beyond that? So, what's the total addressable market? So when you're bidding for projects, the backlog is, of course, a project you've already won, but what's the pipeline of projects your sales team?
So that would be that very nice question. So that is what our sales funnel defines. So we have to move. So what is up, which we call prospects, they have to go narrow down into, so we start with suspects, that these are the suspects, and that value may be like $200 million. So it goes on to prospects. So so the whole addressable market that we'll be working on right now. So usually we believe that we should have 4 to 5 times in the pipeline minimum, and that is why. So we raise an alarm when the prospects are not coming in, because we know from the prospects it takes, now we have reduced the time to 6 months, but it used to take, and we track that time, that these kind of projects, we have a lot of data that these projects take 6 to 9 months. So right now we have a lot of prospects because we are expanded into different geographies. So we are in the same run rate on our prospects also, which will turn into orders maybe after 9 months or 10 months or 6 months. Some are down the funnel, some are up the funnel. So we don't track just the backlog. That's why I wanted to show you that funnel, that we track the whole funnel.
And absolutely, and companies like, similar as you. So, when I used to cover system integrators, there's a company called Trafficcom, which I used to cover, e-tolling company in Austria. The market used to value them on order backlog, so book to bill, revenue as a percentage of contract. But it was all about, the overall suspects, which you call them. I would love to hear from you, what's your success rate? And how has your success rate, i.e. your win rate, how has that, do you track that? I'm sure you do, whether you track everything.
Yes. I wish I have a slide. So from this, we calculate down to the 3 KPIs, which are loss to competition, what we actually lose. Some projects are also then cancelled, so nobody gets the project, suppose. Yes. But that's also a very important KPI, because that means we didn't work through the funnel very well. We couldn't predict for 6 to 9 months that project would be cancelled and there's no budget in there. So sometimes the lack of budget and all that, so in a B2B, that's an art. So we, like in Pakistan, in some area, we have like 4 business. In some area, in our service business, our success ratio is 90%. Any proposal that we send, so that's kind of a recurring. Although that is recurring business, but even projects within that, we consider it as recurring, because the moment we give, it is 90%. So that's why we love our service business. On the other business, then there are certain packets, like large businesses in Pakistan, our success rate is around 50%, because we come out as the only company, although we only compete with foreign multinationals, which are like, $50 billion Honeywells and all that in Pakistan even. But we influence that because of our presence of our office, our commitment to the market. So in Pakistan, it's about 50%. It's a pure product when we sell, which is not big business for us anymore, which used to be very big business, is down to 10-15%. In the Middle East, we were way below, but now we have come to about, because it's a contractor-driven market, the more we've now gotten closer to the end user, which is our strength. So with end user, we've come to about 15%. With large projects bidding, we are still hovering about 3 to 5%. Success.
Thank you for that. Again, there are a lot of questions and we only have 10 minutes. So I'll just pick and choose some questions. There's a question from Vijay Atal. He's asking, how much of sales are international versus domestic? And what's your
right now about 70%. It used to be, but this year it would end up about 70-30, 30 domestic and 70 international.
And what's your average ticket size?
Oh, that varies. In Pakistan, our average ticket size is 30 to 50 million and rupees. And that is our sweet spot. I mean, like one order could be, they could be one outliers of 200, 300 million, and usually one or two would be like that. But rest are somewhere that, which we love, because smaller orders, you quickly deliver a high margin and you do that. And then they keep us going. In the Middle East, we do not want anything less than $1 million, because it's too much work, effort, and our strength is slightly higher. So it is anywhere from $700,000 to $5 to $8 million.
Got it. And his other questions are most of the sales license-based or are they SaaS subscription-based?
So in Pakistan, when we did our first IPO, our biggest, in the whole financial was that we'll build a service portfolio in Pakistan, which would which would cater for over 60% of the fixed cost, which will be recurring. And we've achieved that. Internationally, we've not. So in Pakistan, our contribution margin in services is about 70 to 80%. So 30% of our revenue is through service contracts, but it contributes about 60%. Internationally, that business plan now has started. And the next 5 years, we have to build the same thing. We've already done trials. So Dubai Metro, we have a service business. We have 3 large service contracts. We have now implemented them. They've been renewed for the last 2 years. Now the new IPO with Octopus. This is the business plan to take our Middle East business also on the same KPIs that our Pakistan business is. And that is what we're going to do.
Got it. There's another question. Why was the cash flow from operations negative in 2019? And his next final question is that how do you incentivize the sales staff and the management? Are there any KPIs which you use to reward?
Oh, yes. So very simple. So in 2019, our order intake from Qatar and Saudi was humongous. So we had just started in Qatar. We met huge success right away. And then there was a blockage and all that, and we didn't have banking facility there. So we were servicing everything through organic cash flow. So, so it had to be. That's why we opted not to take dividend. We could have borrowed in Pakistan. So if you look at our borrowing, there's hardly any borrowing. We do not believe in debt as such. So if we clocked $14 million of revenue, our debt on the balance sheet is not even $1 million. So that is why we were funding that and all that. That was 2019, but it is now everything because we had to deliver that. We tightened our belt, no dividends, the revenues were beautiful, profits were beautiful. So we said, it's a great market, you expanded, so we invested and all that was. So now the second question was on sales. Every sales guy down to, we build a P&L and I take pride, even my cost. Everybody knows my cost, and that is amortized over every business down to the salesperson. A salesperson knows their break-even point. The moment he goes beyond the break-even point, with all the allocation of fixed cost on his business, one individual salesperson, he signs a sheet that this is his cost, and that is audited. We can't put any corporate cost out of the blue. So all the costs, so easily, all the sales and all the costs, all should, added up should be the total fixed cost of the company. So the moment they go beyond, so you talk to a salesperson, he knows his break-even point. So he's calculating his contribution margin, and beyond that, he gets a percentage of that. And then stock option plan, then kickers, if he does some strategic. So it's a 360 degrees to make it purely P&L based and 3 strategies, that his personal development strategies, future backlog. So he does that, he gets that money. He can calculate himself. No intervention from HR or anybody. He will get that if he does that.
Got it. Thank you. You mentioned Qatar, and there's a question from Nafis. I think he's asking that, Qatar, you won a few contracts because he's saying that probably World Cup helped over there in terms of demand. Do you think that the demand will taper off after the World Cup?
It might, but if you look at when we got all those contracts, they were our bread and butter business of control. Now we are doing a lot of data business there. Now we built a whole data center, the largest data acquisition project, IoT project in the whole of Middle East has been done by us for QP utility. And actually, Systems Limited is part. I mean, we offloaded quite a bit of work to them also from there. So we've totally we are moving over onto a different platform. And yes, the reason we are doing that is also this digital. That yes, plain vanilla automation business would taper off a little bit, and the margins would drop. So yes, it would be. But we are building services on top. We are setting up our service business there, and that would take us. And that is what we did in Pakistan also. Our whole service business is so predictable. And now that we have installed base, the next step is to setting up a service business and take it to the same level as Pakistan.
Very clear. There's a question from Avanceon Jaffrey, and he's asking that how much of the $56 million backlog is from Pakistan, and how much is it from the other regions?
I think, I don't know exactly, but I think $6 to $8 million would be from Pakistan. 8 to 10, something like that.
Got it.
Same 30%. 30. I mean, it would be 25 to 30% would be from Pakistan.
And the remaining will be from which geographies?
Which would be Dubai, Qatar, Saudi Arabia, a little bit on fringe like Egypt and all that, different, but mostly from these three countries.
Got it. Thank you. There's an excellent question again from Hamza Mateen. I'm loving his question because I think they're very deep. But before that, there's a comment from Bilal Ahmed, and he's saying that he has noticed that he feels that you publish material notices for smaller contracts as well, and he just thinks that the frequency of those contract wins might negatively impact the image of the company.
What we've done is, he's absolutely right. All these, because we had committed to that, I mean, like whatever it was, our threshold was very low, and that's been going on for the last. So actually, now that he said it, just yesterday, I wrote to the board audit committee and got approval that, man, this is too much. Every time I receive it, and I have been traveling. So because I can't do that. So the board, I just got an email from the board that how was it going on for the last 4 or 5 years? So in a way, it is that I can't do that because it is board audit committee's business, but we have gotten it done. And now the threshold has gone way up and it will not be done anymore.
I think there are differences of opinions on this anyways. When I was CFO of the listed company in the UK, there were certain rules, and it was not us who were deciding it. It was the corporate broker who had to decide whether this is a material news. And I think that there are rules on AIM. So you have to follow those rules. And the rule is that if you think it can move the share price by 5%, you had to publish it. So, I know how these things are very tricky.
No, exactly. And that's what, when we went public, we sat with and, we made the threshold, this can do that based on those revenues. That never changed. So changing that was not even being the CEO. It goes to like, honestly speaking, I can't look at the accounts till it is approved by the board audit committee. We have such strict, so I then wrote to it because I also noticed that there's so many notices coming out. What's going on? And it's been approved now in a day, and it won't happen again.
Got it. Thank you. Now moving to the Hamza's question, which is, I think, very deep and good. He's saying, do you have planned to explore emerging integrated Internet of Things space, given your experience in industrial automation? So 5G is coming, IoT is coming hot. You have expertise in industrial automation.
Our whole business of Octopus is IoT. That it thrives on that. We've been doing IoT. As I said, people talk about IoT. So the largest IoT project in Dubai was done by us. All the smart meters connected and all. So, but we are very focused. I mean, we get so many opportunities here and there, but we are focusing on manufacturing space, predictive maintenance, and that. So within that space, like Shell is our customer. So we are trying to develop something for the gas stations. So it is a little bit onto the commercial space, but again, we're trying to predict a few things that when the nozzle, so we will take data on the mostly used assets. So summarizing it, our IoT expertise, we want to utilize when you have to measure an asset's performance. That asset could be a small engine. That asset could be a whole factory. That asset could be a machine. So everything, any data that we capture, record, contextualize, that has to flow into asset performance management. And there are opportunities all around, but we are just sticking to that because we can just do that much. And that is right up our alley and our expertise.
Thank you so much. This was extremely interesting, and I think you're doing amazing work. Your shareholders are getting rewarded. Your performance, financial performance, is amazing. What the tech which you are building is very interesting, and I look forward to hearing more about Octopus during the roadshows. So thank you for your time.
Yes, of course. And if you would, your comments and your feedback, Ali, is always very nice and very candid. We would love, because we like to modify our strategy based on what we hear. And a lot of times, what I've heard in the analyst, I've gone back and changed my business plan, and I accept that.
Thank you.